Welcome back. A U.S. appeals court ordering the Securities and Exchange Commission to review the economic impact of Biden-era short-selling rules. The agency now tasked with better analyzing the costs and benefits. The decision now falling to the commission's new leadership under President Trump, as regulators focus on modernizing IPO rules to strengthen capital markets. Joining me now is SEC Commissioner Mark Uyeda. Commissioner, great to have you this morning. Thanks so much for being here. What's your take on these short-selling rules?
Great. Well, good morning, Maria, and it's great to follow Secretary Bessent. So the appeals court struck down not only the short sales rule, but the securities lending rule, two of them. It is yet another black eye for the SEC. In fact, it is somewhat emblematic of the troubling rulemaking record of the prior chairman, Gary Gensler. By my count, of the rules during the Gensler era that have been challenged in the courts, the SEC's win record is 0 wins, 10 losses, and 1 split decision. I mean, with a record like that, at least if you are in the other SEC, that is the Southeastern Football Conference, that'll get you fired.
Yeah, I understand, and I'm wondering how this changes the rules for ordinary investors. I mean, what should we expect in terms of change?
Well, basically, the court granted the petition of the challengers to the regulations and sent these two rules back to the SEC. So we are taking the court's opinion and giving it a close read, and we are right now, our staff, as well as Chairman Atkins, is considering what to do in response. But what the court said is the SEC engaged in short-cutting fiction to try and not do what any sound economic analysis would consider, which is how these two rules operate together. Securities lending and short sales are highly correlated and interrelated activities. Yet, when we passed these rules, I voted against both of them precisely because of this point. We didn't think about how these two rules interacted with each other. You know, we approved these rules at the same meeting, just within the spate of an hour apart, yet we pretended as if one did not exist with respect to the other. This was largely an integrated package. We should have thought about it that way, and the SEC failed to do that, and the courts held us accountable.
Well, you've got some portfolio here now with so much happening. President Trump also signed an executive order this month allowing 401k retirement plans to invest in private equity and in crypto. The move requires cross-agency collaboration between the SEC and the Labor Department, where you previously served and worked on the 2010 target date retirement fund. Commissioner, I want to get your take on this. What does this mean? This executive order is about to change access for everyday investors. Tell us how things will look different.
Well, President Trump's executive order is a huge step forward for common sense regulation. Back in 2020, when I served on detail to Secretary Gene Scalia, the Department of Labor issued a 2020 information letter, which made it very clear. They said that federal law governing 401k plans, nothing in the law prohibits those plans from considering private equity, venture capital, and other alternative investments as part of a diversified portfolio. The most common option in 401k plans is what we call target date retirement funds.
Right.
And that is specifically designed to have this broad array of different investments, but to date, they've largely been limited to publicly traded equities, fixed income, and money market and cash instruments. Yet, what do we know from looking at what all of the traditional pension plans being offered, largely by state and local governments? They've got slices allocated to venture capital, private equity, real estate, commodities. They do it because they know that they can get a better risk-adjusted return on those investments. So if you or I or somebody who's in the private sector, we largely cannot get access to that type of diversified exposure. What the president's executive order says and makes very clear is you should have access to that. The average American worker and retiree ought to have access to that in their retirement portfolios.
Yeah, I mean, I think it's terrific. I love the idea, you know, of having more options for the investor out there. I just wonder if the guardrails will be different so that you can ensure that they're not buying things and not understanding the risks?
Well, we have ERISA fiduciaries who are responsible for planning each of the options available in a 401k plan. And in fact, that is something that was really problematic of the Biden administration. You know, after Secretary Scalia issued that letter in 2020,
right,
the Biden administration then immediately walked it back in 2021 by issuing their so-called supplemental guidance on the information letter. And it essentially said, the plan sponsors are ERISA fiduciaries, but we simply don't think you're sophisticated enough to understand these alternative investments. I think that is really an inappropriate way of saying essentially the right amount of exposure for American workers and their 401k plans to these alternative assets is 0%. Now, you can argue, to your point, and we've certainly heard from people who are worried that this will mean 100% of people's retirement portfolios get into illiquid private investments that will have a very long-term investment horizon. That's not at all what the president's executive order is thinking about. It is, you have a diversified portfolio. Why shouldn't these alternative assets be part of that?
Understood. Right. All right. Let me move on to crypto. The SEC, of course, launching Project Crypto to reaffirm America's leadership in digital assets. At the same time, lawmakers working on the Clarity Act with Capitol Hill's August recess pushing until after Labor Day, Commissioner. So I want to get your take on when we might see legislation, because we're watching for any indications that the market structure legislation becomes law late this winter or early 2026. Is the Senate schedule getting in the way? What's your take in terms of expectations here on shaping the future of digital asset innovation and new legislation?
Well, we've certainly seen a very significant and productive change in Congress than in years past with respect to crypto and digital assets. Was really pleased with the passage of the Genius Act. Now we have this digital assets market structure bill that's working its way through the House and the Senate. There are a lot of discussions that are going around. What is important is that this is being done on a bipartisan basis. We have members of both parties, and I think that just shows the overwhelming interest in crypto. Over at the SEC, first off, we are ready to respond to whatever law that Congress ultimately passes. And depending on how that legislation goes, we are still moving ahead on our own separate track, that using the authority we currently have to make sure that we have an appropriate regulatory regime for crypto. The days of the so-called just say no and regulation by enforcement approach to suppress and eliminate crypto, those are long gone and behind us.
And it's not just about which entities are having the oversight, right? I mean, it's not just about entities regulating crypto, but also what happens with custody, staking, tokenization of securities, stable coins left on deposit with platforms. Will you walk us through what you're expecting to actually materialize here in all of that?
No, well, you're absolutely right. I mean, there are a lot of issues here. The way I think about it is two basic ones. One that we've done under our crypto task force, and now it's been rolled up into Project Crypto, has been to provide some clarity over what is the scope of SEC jurisdiction. Some of these projects do fall within the SEC's jurisdiction. A lot of them do not.
Right.
And what we've done is to try to issue some guidance over the last several months since January 20th about here are a number of types of tokens or other types of digital assets that are not part of the SEC's jurisdiction. Now, with respect to those that do fall under our jurisdiction, the issues that you just identified, custody, tokenization in terms of clearance and settlement, valuation if they're brought into various types of investment products, the disclosures that need to accompany them. Those are all things that we are working on. We have provided some guidance, but expect a lot more work to come in the near future.
Well, I mean, it also raises the question of bank involvement, right? How much involvement are the major banks? Because Federal Reserve Vice Chair Mickey Bowman last week said regulators should view innovation and crypto with an involvement from the outside sector of banks. And she said that we should be establishing a clear regulatory framework for bank involvement in crypto that will encourage the adoption of these new technologies. Is that part of the discussion?
I completely support Vice Chairman Bowman's efforts on this. You know, one of the first things I did in the new administration when I was the acting chairman was to rescind Staff Accounting Bulletin 121, which essentially made it impossible from an accounting standpoint for any bank to hold crypto in a custodial role. So now what we've done, by removing that artificial restriction, an unnecessary one, I would add, on financial institutions and banks, we've now we've now teed up the right questions, which is, all right, since the accounting is no longer a prohibition where you would essentially need to put all these custodial assets as a liability on the bank's balance sheet, since you would no longer have that as an impediment, what are the real safety and soundness and other prudential concerns that banking regulators ought to be concerned about with crypto? And let's have that discussion.
Yep, great point. Mark, it's good to get your take. Thanks so much.
Good to be here. Thank you.
All right, Commissioner Mark Uyeda. We will be right back. We've got a big hour coming up. Stay with us.